So everyone's favorite broker, Robinhood, drops 10% today below its IPO value. That's kind of a joke. It's not everybody's favorite broker, but you know what I mean. Robinhood is down nearly 10% today, all off of very, very bad earnings. So we're going to go over the earnings. We're going to go over why they were so bad and where I see this going through the next couple of months, and ultimately if I would be buying Robinhood long term. A lot of people in our private and public discords have been asking me about this. So I decided that that is what we're going to talk about. If you guys want me to go over any earnings that came out this week, like we have Google going soon, Microsoft, Facebook just went, please comment down below and I would love to do those videos for you. If you haven't already, go ahead and check out the Discord. It is completely free. You get access to my long-term positions as well as our technical analysis bot. I live stream with them every single Friday, and you also get access to our free courses, which a new one will be dropping very soon. And if you want, you can upgrade over there so that you can get access to all of my trades as soon as I take them. We have an 85% success rate with our trade ideas and a 92% success rate with our high conviction trades. It is completely for free your first 3 days, and there's a 30-day money back guarantee if it's something that you're not interested in. So let's go over this article. Shares of Robinhood are getting crushed Wednesday following a worrisome earnings report from the company that is a newly public brokerage. Robinhood shares have plummeted 10% to around $35.55, dipping below the stock trading app's IPO price of $38. The decline came after Robinhood missed on top and bottom lines of its third quarter results. Revenue was dragged down by a slowdown in crypto trading, and Robinhood warned, and this is where it gets bad because guidance is, bad guidance and missing top and bottom is normally really bad. They warned that the headwinds in trading will persist into the end of the year. For the third quarter, total net revenue came in at $365 million, missing the estimates of $431 million. So they missed by a lot, not a small amount. This is well below the second quarter revenue of $565 million, which was bolstered by a massive surge in crypto trading. Third quarter transactions-based revenue total of $267 million, with only $51 million coming in the cryptocurrency trading. Revenue from crypto trading totaled $233 million in the second quarter, helped by an interest in memes-inspired Dogecoin. Second quarter was, quote, one of those idiosyncratic markets events where there's a massive interest in specifically Doge, Robinhood CFO Jason Warnick said to NBC. We, quote, love when those moments happen. It's a great way to bring a lot of new customers into our platform, but we're really thinking about investing in crypto over the long term. It's going to be impossible for us to accurately predict our revenue on a quarter-to-quarter basis, end quote. It may be harder to find the brokerage app to ride next to crypto coins like Doge if one should get hot before the year end. Robinhood CEO Vlad said on the call that the company is going to wait for the regulatory clarity on crypto before adding more digital coins to the platform. The broker currency currently offers several coins now, even though you don't actually own the coins. Please remember that, guys. I did do a video on that when we talked about BITL. Robinhood reported a net loss of $1.32 billion or $2.06 per share. They were expecting a $1.37 loss, so they're losing more money than what is expected. The company also saw a slowdown in user growth. That is really not good. Monthly active users totaled 18.9 million, down from 21.3 million in the second quarter. That's a ton of people losing their money and quitting trading, unfortunately. The brokerage also gave a bleak outlook for the rest of 2021. Robinhood said that it expects fourth quarter revenue no greater than $235 million. Company sees account growth in line with 660,000 accounts opened in the third quarter of 2021. Quote, we want to be what we felt was appropriately conservative for our revenue guidance, particularly due to the fact that we are facing seasonal headwinds and lower year-over-year volatility. Goldman Sachs said fourth quarter guidance appears more conservative than they had initially expected, and that they could set the company for a lower bar in the future. Quote, at the end of the day, trading-oriented brokerage revenues are difficult to forecast. The Robinhood has largely grown in bursts and step functions over time rather than in a straight linear line, Goldman Sachs analyst Will Nance said to clients. Quote, long-term investors will likely still look towards... What just happened here? The market closed. I was like, what? Let me see. Goldman Sachs fourth quarter. At the end of the day, trading earlier said that. So Will Nance said longer-term investors will likely still look towards the company's impressive track record for user acquisition and significant optimality from higher user monetizations and more recurring revenue streams in the future. On the earnings call, Robinhood management describes the quarter as one without a market event like GameStop trading in the first quarter and the rise of Dogecoin in the second quarter. So basically how it's supposed to be, right? We decided as a company to be cautious about chasing growth with marketing dollars, said Warnick. You can always spend more to get more customers, but we'll see if this is how you tend to get lower intent customers at worse economics. Starting Wednesday, the half trench. All right, so basically, yeah, they really missed revenue here, and the growth is really bad. To have your monthly active users drop by nearly $2.2 million or 2.2 million users is really bad. Now, I don't want this video to become a business breakdown on how Robinhood makes their money. If you guys do want me to do a video on how Robinhood makes their money, I can completely do that. I think that would be a fun video for you guys who don't understand like how a broker makes money, specifically how Robinhood makes money. But there are a couple of issues here. Right. One of the first things, let's just look at it from a business standpoint here, kind of like what they have been saying. Um, yes, you can spend money to acquire clients, which is basically the last thing they said, right? You can spend a bunch of money to acquire clients, and that's how a lot of companies do this. So let's just look at Uber, for instance. Uber is one of those companies where they spent so much money so that they could become profitable, and they're not profitable yet, but they spent so much money so that they can generate users, that they can get user growth, more users onto the platform, using the platform, taking losses quarter after quarter, massive losses, by the way, in order to get subscriber growth on track. And you see during the pandemic, I don't know if you guys had paid attention, but Uber was actually giving away free Uber Eats deliveries completely for free to everybody. So if you were to order something, during the pandemic, the beginning of it, on Uber Eats, you would actually get that delivery for free, no service charge. So you still have to pay for the food, you still have to pay for the if you want to tip and whatnot, but you don't have to pay a service charge. And this is all in acquiring customers so that once they are done with that, you can actually go ahead and hopefully stay with the customer. Stay with the company, and your long-term revenue as a business comes off of how much, like, what's the lifetime's expenditure from that person. So for instance, let's just look in like my consulting business, my private mentorship group. I give you a free month, and then hopefully you stay after that free month. You should stay, and you give me $100 a month after that. Now, in a business like Robinhood, they have to spend money to acquire clients, and the fact that they are continuing to blow through money. What you really want to see is if a company is losing money, which companies are going to do that, especially in the beginning. But if a company is losing money year over year, but then as they are continuing to get more clients, the company starts to lose less money year over year, because that's what you want to see. If we're looking at this like a line chart, let's just I'll draw this out. If your customer base is going like this, you're making more and more clients, you're spending more and more money, but your client base is going up. You want to actually see your losses go down over time. You want to see your losses continue to go down. So, all the money you're spending to get these clients is bringing in more business, and then you're able to do this more productively, and you lose less and less money. What you don't want to end up seeing, which is what you're seeing here with Robinhood at this point, is they actually have peaked. They are not bringing on as much clients as they were last quarter, but they are still spending a crap ton of money and losing more money than they had expected. So that's not a good sign. And a lot of that is probably because the broker, in my opinion, I hate them. I feel like I have a Robinhood account that has about $25,000 in it that I use to trade so that I can show people within our communities how to trade. But to me, there is no reason why you would use Robinhood over anything else. I've made plenty of videos about this before. So looking at this from a long-term standpoint, would I be buying Robinhood right now? No, I wouldn't, because the only way that the company really makes money, since there's no commissions, is not even through options, which like TD Ameritrade, those types of companies, they do no commissions, but they do options commissions, which is very small, but it's still a way to make money. The only way that Robinhood makes their money really, we can do a full business breakdown, is through Robinhood Gold. And the best way for them to get that Robinhood Gold money is by margining you a ton of cash. Right. And a lot of people who use Robinhood don't have a lot of money. And it's not a problem. It's just like, if you had $1 million, why would you not go to a more reputable broker? right? Why would you margin all that money on a company like Robinhood? It's just really not worth it. If you got more than $400,000, why would you use Robinhood? Unless you really do like the platform and you trust them with your money, which I personally don't. This is not a bashing Robinhood video, but at the end of the day, I don't like those numbers. I don't like that they are losing members and they are losing more money. If they were gaining members and still losing the amount of money, like losing more money month over month, year over year, it would suck. But at least you could say, all right, well, subscriber growth is growing. This case, neither is growing. So I would not be buying Robinhood. If Robinhood goes down to like $10 a share, which I don't think it will, then potentially I would be looking at buying it. But we fell through the floor here technically. We are below $40. Fundamentally, I don't like the company, and I think that it will continue to slump. Guys, I hope this video helps. Hit the like button, subscribe. Let me know if you want me to do a video on how Robinhood actually makes money. Go ahead and check out our free Discord. The link is in the description. I'll see you guys next time. Peace.